Right, still some missing, but we'll get started anyway. Non-farm payroll week. That's what we have on our hands, and we have on the data front, we've got China and Germany away on holiday tomorrow. China's away for a couple of days. China's away for most of the week, rest of the week, in fact. So non-farm payroll on Friday, and not a lot in between, apart from services in the UK on Wednesday. We're looking for a better number, marginally better number on UK services, and we are looking for a good non-farm payroll on the basis of average earnings tipping up. So what does that mean for the charts? So let's just go through the charts. So here we have a pound yen coming right back on to this support level at 963. We're literally just a couple of pips above it right now. So I think talked about this 20-day moving average, just sort of bullish consolidation, making contact with some support levels, and here we are coming right down here. If we can't hold 960 tomorrow, then it looks like we could come back down to 760, and 770 is this decent support from the July 17 highs. What do I think is going to happen? I think we will potentially do what we've done here in mid-July, where we had a few days we consolidated, a few days of selling, and then perked up. So if we perk up and then sell again at resistance, then of course this is all over. This is potentially going to turn nasty. But in the meantime, we've only just started, so you've not missed anything. Yeah, so in a consolidation, you need a dip to get volume into it. One of the problems with the pound yen is it's when it consolidates like that, you get into low volume, so they drag the market down in a bullish situation just to shake out weak hands and get some volume back in it. So it's just, you can see these big touches here are May and July, so this is a huge level we've just come down to. With quite a bump. So we need to see if we can work up from that. So what about the hourly? What can we get from the hourly that can really tell us what to look for? Well, on this hourly, we need to see a push above. We need to close above 970 tomorrow, either overnight or tomorrow. We need to close above 970 to at least have a chance of this bouncing, and then see if we can push back to some of these levels, because we've got a lot of congestion here now. Early part of last week, in fact last Monday, we did a very, very similar thing. We dropped hard here last Monday and spent the rest of the week just eking our way up, not really having any dynamic pushes. So far we've got to repeat the last week. Excuse me. Just a question of whether we can close above this last week's low. So just a reminder, it's a 60-minute chart, so the fibs is on the last week's high and low, okay? So a dip to 900. Now, one good scenario on this, one interesting scenario will be we fail at 970 tomorrow, we dip into, or dip under 900, and then hold, and so we get an hourly 127 extension reversal. Otherwise, if we keep failing at these two, or either one of these fib levels, then we could be coming down to 148, 147, 147.70 being the support we talked about. Okay, so I'll be looking at these levels tomorrow to see what we are doing. Of course, a push into 150.30 could just see this crank all the way back. One thing to note about, in terms of scalping, one thing to note about this pound US dollar, this is Friday's low here, so I mean it's relatively tight range. I didn't put the fibs on because it's quite a tight range. I didn't trade it in the morning. I came to my screens quite late, having worked quite a lot on Saturday and Sunday. But at very early on into the open, in first half an hour, we broke 350, Friday's low, and any little dip was just sold into. So once you break this level, just if you are going to trade it later in the day, just keep shorting unless you get a very good buy signal. And so if you look at the 5-minute chart, it's a really narrow range. So we had the gap, the Friday's close, and the 200-day moving average above us. Really titchy range, and we just broke out of it in the second bar. No fade, which does, I have to admit, make life a little more awkward, because if you've not taken the plunge to take that break, then you are basically scurrying around trying to look for other levels, which in this case was difficult, because it just, after 10 minutes, it just broke down very gently. Okay, so a good day if you were sharp enough to note that we were likely or had actually broken Friday's low. And so, did anybody take this? Anybody trade this? Okay, well, we'll come back to that later. Bear with me a moment, I just want to check something. Okay, so now, mistake of mine to suggest that we should be looking for shorts in the, well, it benefit hindsight, of course. Why did I look for shorts in the Dow today? Because we did actually have we crashed into the 200% on the 15-minute chart. So this is fibs. We've ranged Friday's high-low, and it looked very weak, looks as if it couldn't hold, and then at 45 minutes into the trading session, we held the 127 extension. In fact, it's a 161 extension. It's an extremely bullish move, and then just pushed higher. So it was contra to the open trading range. I was trading against the open trading range, which is not a good idea. Well, it was from the point of view that we had a potential failure on the 15-minute chart. So I would always take these. At least once a week in any one chart, you'll get an opportunity to short that's a resistance level on a 15-minute chart, and it could, when it works very well. So I will continue to take these extension trades and hope that they pay me back in the future, which because I've done well out of them in the past. Okay, bigger picture stuff. If you've got the fibs on this range here, from May 18 lows to August 7th highs, we look as if we are going to see 620, 630. And if we really get going, we could see 23,200. Okay, so if I am going to short again, it's going to be a pop up to something like 650, 625, 650, and at least a 15-minute sell signal. If I'm going to start shorting that one, because one of the reasons why I was looking for the short side is the divergences up here. And we've got a lot of divergences. We have this one. So you can see we had a divergence here. This high generated a divergence here. That created some downdraft. And we are RSI diversion up here. So this market is making new highs, and RSI was making lower highs. This MACD is divergent as well, and the bigger the time frame you look at, the clearer it is. If I drop up to the weekly, you can see the weekly is even more divergent. I have to do this chart. That's why I was looking for a short. We've got this pattern up here as well, this funnel pattern from not very well drawn, so I'll just try and make that a little bit more accurate. So from this high in Feb to, that's better. So we're literally right on the line there now, hence the reason why I was attempting to short earlier. If we pop out of this, if we start closing under 300 or 250, I think this could come down quite hard. In the meantime, this is just getting bought. You can see, let's reflect on what the pound yen's doing in relation to what this chart's done, because this is a 20-day moving average, a 50 and a 200. On this Dow, on a weekly chart, we've only tested the 20 here and here. So this is extremely bullish, and the big money just continues to pile in, and it's not wanting to come down anytime soon. Okay. Right, so that's the pound yen. Let's just look at the scalper score 15-minute on the pound yen. Let's take this off. Friday's high, Friday's low. So we dithered here at 10:30 UK time, and then started to sell into midday UK time, and then dropped further. In the meantime, this failed under the 200 moving average as we got going in the morning. This was the first 15-minute of the London Open, which was lower and engulfed the previous bar. So that ticked a lot of boxes for the short if you're at your screens at that particular point. Now I will put the fibs on here for tomorrow, and when I come to my screens in the morning, I'll just double check that is actually working. One thing to note about fibs on Friday action, you really need to be very clear about the potential moves on this scalper score 15-minute setup. So there's couple of key things on this 15-minute chart: either extension failure, which I tried to do on the Dow and didn't work, or zonal failure, zonal buys or zonal sells. There's the mid zone. We were close to The 50% is the green line. So we started failing at the middle part of the zone, and by the time we had the first 15-minute bar close, we engulfed the action. We were already down the lower part segment and then crashed through the main zone here in towards mid-morning UK time. So 15-minute scalper score fibs, extension failures, or for shorts of course, or zone failures with confirmation on the close below the previous day, and that works in reverse. So you got extension buys if we start seeing one in the early part of the session or mid to late session, and then wait to see what happens if we can close above the previous day's low, or if we actually start to rotate back down again, or if we start, if it's bearish and we are failing in some of the higher parts of the zones, watch for the failure. So I was talking about bulls, wasn't I? I started talking about bulls and then I suddenly switched back to shorts again. I apologise. So if you get a 15-minute reversal, look for pushes up into previous day's zones. If we close above previous day's highs, if it's very bullish, comes in and holds this area down here, this zone down here, then look for extensions. Okay, so extensions, zone, extensions. If you've got a breakout, it's got to close above the previous day's high or close below the previous day's low. I would suggest you print out the part of the control sheet that you've got and have that by your screens. If you've not got that, I would suggest you might want to do that. Okay, so we've talked about, I think, let's have a look at the euro, but I think the pound yen is the most interesting chart. This is doing similar sort of thing as the pound yen, sitting on, this is a huge level here, 733, and we're literally just a few pips above it now. So the close, if we close here and short at 750, 760, we could start really dropping hard. Now with non-farm payroll on Friday, yeah, that is a possibility. If this, we're trapped between the 50-day and the 200-day moving average, any chart that gets trapped between these two moving averages can get very choppy until we close one way or the other. Just going to get a better colour. So I think what might happen is if we get a little pull back into resistance up here, I'll get a white pen, hang on, get a white colour. If we close into this area here and meet the 50-day moving average, we could come down to the 200 over a period of time. Or if we just dip under here and close back up, then we could be working our way back up to 120. So it's possible we just get a repeat of this where we just dither either side of this fib level and then break one way or the other. So you can see how this one, it's harder to predict once you've got charts in no man's land, like, well, it's not no man's land because we've got support. It's a little harder to predict once charts get stuck in areas like this. You know, if you can see, if you're here and you can see bottoming tails and a fib level, then it's a little easier to say, right, just, you know, buy into that support and see if you can break up. Here we've got sort of just flailing around a little bit. I'll try and do an Elliott wave in a minute, but so my suggestion is the stochastics are very low, the RSI and the MACD is very low. So I think there is a potential for some sort of bounce up here, but if we just bounce into the 50-day moving average and fail, or maybe we do come as high as 1200 and fail, then this could come tumbling down. Let's look at the, I mean, overall, the euro's not been a great one to trade. I think I might just move on from this because the euro's not a great. I mean, let's face it, it's been in this range, it's been in the box since early to mid-July, and here we are, early October. So this range is only 700 to 120 roughly. It's only a 300 pip range in about 3 or 4 months. So that is not a very good chart to look at. Let's look at the pound US. This is a bit clearer. I mean, from the point of view that we've closed under this 317 fib level, any pullbacks to 350, 320 could see us come right the way down to 132 or lower. So 350 now is a decent level of resistance because that's the main breakdown area from today. So a 70 pip push higher into this daily chart could then see us come right the way down to potentially 130. And the yen is looking stronger because it's got the 20-day moving average above it. The pound US cable is got the actually it's a 20-day, isn't it? Not a 50. On my other daily chart, I've got a 50. I apologise, that's a 20. 50 is not that much difference, I don't think. Let me just check. Fair bit. So I think this 131 is next stop. If we get up, I think I'll trade this in the room tomorrow, and I'll explain why the DAX may not be a good option to day trade at the moment in a minute. I think I'll want to look at this tomorrow and day trade this to see if we can get a shorter pullback to this sort of area. And the reason why, let's move on to the DAX now then. DAX is sitting high, very only 50-60 pips off its all-time high from June. So I think we may get into a stagnant sort of sideways action before we get another dip for this to push higher. So I would much rather see this, if I was going to trade this, ideally I want to go into Friday's cash market close, because I don't think we've tested that yet, have we? Did we? Let me just see Friday's close, hang on. No, Friday's close was 807, and we didn't get any kind of gap fill. It's a gap and go, just about a gap and go. Gap and go is where you see a dip without getting a close, and then it comes back into the range and breaks up. A gap fill is where this is a narrower gap, ideally about 50 pips or less, and you're much more likely to get a gap fill and then get a chance to buy the gap fill and trade it up. So that's why I'm suggesting we don't look at this tomorrow morning, because I think we need a decent pullback when we may get stuck in a little range again. So I'm going to keep this 807 marked up on this, I think, and then see because if we come into contact with 807 later in the week, that might give us a chance to get a pullback. The hourly is that's Friday. That's Sunday's open here, 8:50. We talked a lot about Sunday Open. Well, that's the low of today at lunchtime UK time was the Sunday Open. So it's so bullish it didn't even test Friday's close, cash close. Obviously, this being a futures market. So I want to get short on the pound tomorrow because we've got lots and lots of resistance just up here. 340, 350. I think potentially a good place to short. Euro yen. I looked at euro yen today, and I was hoping earlier in the day that it would hold 230 and push higher. That is struggling as well. That looks as if it wants to come and see 175 again. So I won't touch that one at the moment. And so of the mainstream charts, I don't think there's anything else I can think is interesting. Looks at the pound Aussie a lot. We've got some big data coming out. I'm going to leave the pound Aussie for another couple of days. Got a good few moves out of this recently. This is a bit more liquid than some of them. So the sorts of buy setups on a chart like this would be so obviously this is a big data move. I think that must have been the right decision. It just drifts lower the following week, and I start to buy around here. Once it starts closing above that support. So that was a decent leg. I got at least some of that, not all of it. And last week I was buying these sorts of dips as well. So this week I would like to see this potentially dip into 900, and then I'll trade it back to Sunday's Open and potentially higher. But yeah, it's had quite a decent seller's bar today. They're all very, very similar charts, aren't they? As far as the pound's concerned, all decent selling, dragging it down, waiting to find a footing in the market with some of these moving averages. They're just too far away from them, and this is the whole point about for currency markets. Currency markets love to come back to their averages. If you look at this 200, let me get a bit more data on the chart and I'll show you what I mean. If you look at this 200-day moving average on this one, so here we are, just a nice gentle slope. So all this is doing is, I mean, down here, it gets too far away from it, so it climbs back. Up here, it gets a little bit too far away from it, so it drops back. A little underneath, a little above. You can see, so it's got this gentle, it's constantly correcting. Most currency markets will constantly correct around the 200. If it just gets too far away, there will come a point where it will just want to go back. So it's too weak here to go and retest it, so it then starts dropping again until you get a full-blown reversal pattern which drags it up, hesitates around the 200, and then goes over again. So you'll find these sort of gentle charts everywhere on a lot of commodity and currency charts. It's the very nature of commodities and currencies. Let's look at oil then. And pull back from this. And you can see what oil is doing with this 200. Yeah, here it is, just gently sloping up, sloping down a little bit here. But we get too far away up here, we get too far down here, too far down here. So at the moment, we're potentially coming back to the 200 here, which is why my videos at the weekend talked about 49 49 would be a test of the 200. I wasn't actually referring directly to the 200 when I did the video, but you can see on this daily that 49 is the 200. So I mean that's a big advantage with currencies. It's also a disadvantage from the point of view that you don't get many big breakouts. If you're looking at stocks, if you want big breakouts, then you need to be trading stocks. And stocks like Nvidia. So this stocks, unless it's a very rotational stock, stocks will tend to hang around close to the 200, consolidate, and then if they're really bullish, they'll really run. You get a couple of ways of pullbacks. It's doesn't quite come back to the 200, and then you get the runs, and it's happy to stay away from the 200. Whereas, you know, if this was a currency chart, it will be going underneath, popping above, going underneath, assuming it stays bullish. Stocks are happy just to you know, find some support and get going again. So let me find a better example. So that's why it's worth noting that if you are trading currencies because you want a big move, be wary about currencies' desire to come back, to gravitate back towards moving averages. This is Facebook. Traded this a lot in the past, haven't traded so much recently. And similar story. You get a period around here just before the end of 2016, but once it breaks here, it's happier just tracing the 20-day moving average, just waving up. It's not bothered about the 200 because it's a strong stock and you've got more chance of it pushing higher. Okay, I think that's enough of that point made, unless you want me to go over any other aspects. So that's why if you now think of that in terms of what the euro is doing, for ages the euro was just, let's get a bit more data. For ages the euro was just gravitating around the 200. We took out a long period of gravitating around that, massive box, very hard to trade. So at some stage we will need to come back to find the lower the height of the box. At some stage I think we're going to come and see 115, at which point this could really set this on fire. All right. At the moment there's a story behind the pound, because the pound's pretty much, well, it doesn't ultimately have to raise its rates, but it's a very high probability we're going to get higher rates. So because there's a story behind the pound, pound pairs have been easier to trade. All right. So we've talked about scalper school aspects of the pound US and the DAX. Talked about some of the bigger picture stuff on the pound and the indices. Anybody got any questions or charts they'd like me to look at? Okay, anybody trading any stocks at the moment, or are you all day trading at the moment? Anybody trading stocks? Okay. Overnight possibilities of DAX. Are you holding some DAX overnight? Are you holding some contracts in DAX? Okay, good. Well, if we can close above 960, then we could really get going. That's a nice chart. Got messy and a little flat here, but it's looking good at the moment, and no indication it's going to slacken off anytime soon. So last week's high was 860, 870. That is going to be, if we see 860, 860, 870 again tomorrow on a day trade, I think that will be a good one to trade. In fact, let me put the fibs on today's range. Obviously the day is not quite over yet. Well, we'll include Sunday's price as well. So yeah, 860, 70. That would take us close to today's lows. If we see that, the bottom of the zone is 863 to 870. So if we see pullbacks into those areas, then that could be a good place to get long. All right. I think I might leave it there because we can obviously do more in the room. If there's any other aspects that I think is worthwhile going over, we can do that while it's a bit quiet in the room tomorrow or later in the week. So unless you've got any more questions, I think I will leave it there. I'll put these charts back to Scalper School way. Just remind ourselves what we've seen today. This Dow, let's see how it's holding the 20-day moving average on the 5-minute chart. It's just gripping it the whole time, whole period. I personally don't think we need that on a small time frame, so I will take that off. Way above the 100% of Friday's move, so it's extremely bullish. Okay, as long as you haven't got any questions, I'll leave it there and get the recording to you quickly and see you tomorrow. All right, I'll line my charts up before I shut down so we can, if I see anything, I'll let you know. But right, see you tomorrow, guys. Thanks, everybody. See you then.